and its high-end operational risks. Thank you.
Thank you so much, Mrs. Behari. And what I did was I did ladies first because yes, it had to be ladies first. So you're welcome to this program and we're excited to know what the insights and your views and perspectives on this from the South African Revenue Authority. Thank you for joining us today. Next on the list of panelists is Mr. Emeka. Mr. Emeka, you're welcome. Mr. Emeka from Nigeria, shout out from Nigeria. Mr. Emeka, we'll have you. Thank you.
Thank you, Folashade. Good day, everyone. My name is Emeka Nwankwo, and I work with ATAF, the African Tax Administration Forum, as the manager for domestic taxes. I'm looking forward to the interactive conversation around the third-party data. Thank you, Fola.
Thank you so much, because I learned that you have experience also from the Federal Inland Revenue Service. So I'm hoping that you'll be able to mix those of ATAF and the FIRS to give us a very robust perspective on this conversation today. Thank you. The third person and the next person on the panel is Mr. Vincent Hyving. But I think in the interim, Mr. Charles Lugenwa will be holding brief for him. You're welcome. Over to you, sir.
Thank you. Good afternoon, good evening to you all. My name is Charles Rugema. I work as the Manager Business Intelligence in IT at the Uganda Revenue Authority in Kampala. Thank you.
Thank you so much. You're welcome. And now to go into or to dive right into the conversation for today, which I want to say again is leveraging on third-party data to enhance compliance and revenue mobilization. Again, I want to tell our viewers today that you can please drop in your chat in the chat box. We're open to all perspectives and every side of this conversation. And remember what I said earlier, that it's your data. You are the third party in some instances, so you must be interested in this conversation and how it affects you. So right into the question, the first panelist I'll be throwing a question to is Mr. Emeka. Mr. Emeka, please, can you kindly tell us what third-party data is? Thank you so much.
All right, thank you, Fola. Just to give you a high-level description of when we speak of third-party data, what we're talking about would be those information that normally the Revenue Authority doesn't have in its regular day-to-day operations, from the returns, from other interaction with taxpayers. This information held by other government agencies, businesses, banks, land registry. So this is basically data that is not typically, or that is not sitting with the Revenue Authority, that is obtained from other parties that might have gotten that information from taxpayers due to their interaction or regulatory responsibility or business interactions with taxpayers. So at high level, that would be the third-party data we speak of in this context.
Thank you. That's a bit, it's robust. You basically covered every impacted party. Mr. Lugenwa, please, can you give us your own perspective of what you feel third-party data is?
Oh, thank you. I think the principle is derived from the fact that no business can exist in isolation of other businesses. So for any business to prosper, it needs clients and it needs suppliers. So there is always a trail of facts recorded about the transactions of the suppliers and those who purchased from that entity. So if we took time to analyze the information about the suppliers and the information about the clients, we can easily reconstruct the facts presented by any business in its return. Briefly, that's what third-party data means. So we can reconstruct the fact you present in any return based on the information that is derived from other people, either your suppliers or your clients. Thank you.
So it's like creating a total picture and being able to see the total view or history or profile of a taxpayer and be able to use that to recreate or establish what their information or tax obligation is. Thank you so much. Mrs. Behari, what's your own view of third-party data?
Well, for us, third-party data is, as the previous speaker said, it is data that is hosted by other entities, whether it's public entity in the public sector or in the private sector, like your banks, your insurance companies, the Department of Home Affairs. So it's all the other data that we do not necessarily have, or we want to verify information about a taxpayer. That is primarily, it's all sorts of different types of data points that we may be able to access from about a taxpayer to get a holistic view of who the taxpayer or trader is and what information they hold, how do they transact, where do they transact, etc. Thank you.
Thank you so much. So the word here is holistic, a global view, a global picture of the taxpayer, and you leverage on information from the MDAs, the ministries, directorates, and agencies, from the banks, as Mr. Emeka said. And then Mr. Lugewa went into supply chain and all that, and being able to have that full view. And leaning that, I think also the immigrations and all that, to know who is coming in and out of the country and how long they are staying for purpose of expatriate information, and the immigration data also goes into the third-party data. So the next question I'll be throwing at Mr. Lungewa is, it's quite lengthy, and I'll kindly repeat it where you want me to. So integrating revenue systems with third-party data sources system is a great avenue towards identifying and registering businesses and individuals earning income that are not registered by the tax administration. Can you kindly share your tax administration's journey towards achieving this objective and the challenges that you have encountered while pursuing this integration of data? Thank you so much. Mr. Lungewa.
Yes, thank you so much. The register expansion, if you read that, register expansion, every taxpayer or every business or individual who is supposed to be on the register, we've got a responsibility of ensuring that that person is on the register. So using third-party data, we'll be in position to identify people who are selling goods to entities that are registered, but are not registered with us. So in other words, the person who claims to have purchased from that entity declares that purchase, but the person who is purchased from has not declared any of that transaction anywhere because he's not registered with us. So in the interest of that, we require to ensure that such taxpayers are added to the register. So when someone declares an expense, he's obliged under the law to declare the person who earned that expense from him. Now, if he declares him without the details, the tax identification details, then we can go further to identify that this person is not actually registered, and we can use that basis to add that person to the register. So revenue agencies, like in Uganda Revenue Authority, we've implemented a system called EFRIS. So electronic fiscal receipting, when you go into a shop to purchase something, you purchase and then you give your tax details to the person you've purchased from. So the person you purchased from will record your details and send that information to Revenue Authority. So we are able to see that person A has bought goods worth, let's say, $50,000 in a given month. And then person C has sold goods worth that amount to that taxpayer. So in the process, if the person who spent $50,000 is not anywhere on the register, it means he's not registered. So we can actually start a process of reaching out to this person and ensuring that he's added to the register. And then we have a basis upon which we can assess the tax itself. So the third-party data can be utilized to identify those who are playing a role within the economy substantially, but are not anywhere onto the register. We've used the third-party data like the electricity meters, we've used water bills, we've used the telecom data to identify people who are spending above a certain amount on their telephone expenses, but who are not registered anywhere. There was a case where we had a person who was registered as who was indicating that she's a housewife with no income, but was disposing of a property worth billions of shillings. So through third-party data of the land transfer, we were able to identify who sold this property, and then were able to add that person and assessed the taxes that she had never declared before. So third-party data would be a good source for us to expand the register without necessarily plugging our register with people who are not adding any value. The opportunity we have is that we are using facts based on the past transactions, and we will not find a challenge growing these people into valuable taxpayers if added to the register. Thank you.
Thank you. So it's like creating a spider web, and the cobweb links every part of a person or individual transaction, and also links it to both the supplier chain and the retailer chain. So you are able to tie it all up to get a full and accurate data on that person, and also linking that with any other person that has come into interaction or transaction with the individual.
Yes.
Yeah. Okay, so any challenges? Okay.
Additionally, like we've had landlords and tenants. So where a business is declaring that it paid rental expense worth a certain amount to a given person, and that person who is declared as a person who received the rent is not even registered for rental tax anywhere. So we've used that same information to identify landlords that qualify to be registered for rental tax, and then we've grown our rental register based on that information. And we call it the taxpayer ecosystem. Yeah.
Yeah.
Thank you.
I know Mr. Zake is very interested in the ecosystem and all that, and it's true. The taxation of people is actually an ecosystem. So are there any challenges that you can bring to the table here? Challenges you've experienced in doing this that we can learn from?
The challenges we are experiencing are the data quality, because the third-party entity is not collecting data to facilitate revenue agencies. So their data is not necessarily in a format that the revenue agencies want it. So we have to invest into cleaning that information and be in a position to utilize it effectively. The second one are the skill sets of our people, the analytic skills for our people to match that information and drive the insights that would help us identify those taxpayers to expand the register is also another thing. The other one is the growth, volume of data. Sometimes we don't have anywhere to store this information because our budgets are inadequate in many cases. The other one are the national laws regarding the privacy data of citizens. You know that when someone has some information within the data, the law requires you to protect that information and not reveal it to a third party without going through other. Then the connivance between the two parties, they can all opt not to declare certain transactions, depending on the benefits. We've had those kind of things, and we are working daily to see how we can mitigate those risks that are associated with those.
Okay. Thank you so much. Mr. Emeka, any thoughts from a combination of FIRS and ATAP on this conversation, looking at the Nigerian perspective?
Yeah. So just to add a layer to what Alaska has just shared, beyond just registering or discovering taxpayers that are not registered, there's also the element of the registration in terms of third-party data. Because in instances where you actually have businesses that have supposedly are not no more in business or transacting, sometimes third-party data helps you confirm either through the bank account, are there still inflows and outflows? Are they still transacting on the existing account? Are they still interacting with different maybe government agencies to get licensing, renewing licensing, for example, and all those are acquiring property? That helps you understand if really the registration claim, the transactional status or the case of registration is valid. And then we come to things like VAT threshold in terms of confirming businesses that are supposed to register, certainly for VAT based on the threshold. We've seen instances from FIRS, for example, where bank data has shown that businesses that might present to be below the threshold, bank data has shown that the amount of transactions being done is above the threshold. However, the second level of this is then going through those figures and understanding how many of those transactions are considerations, for example, for supply of services or goods, or how many of them are just inflows and outflows that have no relation to business transaction. But however, at the high level, at the first level, the data shows that the business is transacting at a certain threshold. In respect of the some of the challenges, again, like mentioned, those are the valid challenges you find across the continent. But majority of the issue you find is that most revenue administrations don't have a data strategy. There's no proactive action to figure out the type of data they might receive or the type of data needed, who is it coming from, in what formats, to have a comprehensive and cohesive strategy on how do you receive that data. Are there instances of where you can influence how that data comes or what formats through regulations? And then what skills, like rightly said, do you need and systems to be able to receive those data and then translate it to what you need? I remember a couple of years ago, this was done with Excel when I was in revenue administration. You have to receive this information. You have to sift through the Excel, find the names of the taxpayers. But what this did is automatically there is a focus on taxpayers who you already have on your tax register, because that is what you have to compare to help you make it easier. And then unintentionally, you might exclude those that are not on the tax register. So now you're looking at declarations and if they are correct, rather than also looking at those you can register. So there are those challenges, but one of the first things for revenue authorities would be to have some sort of data strategy that is implementable, looking at all the sources and what is required. And this would include the data privacy aspect that we just spoke about. Usually revenue officials have the oath of secrecy, confidentiality, for countries that have gone through the EOI process or AUI process. You do the ISO to look at, how you manage the risk of data leakage and all. But then there's the aspect also of the third parties letting you know that the law doesn't require them to share such information. So again, this is where revenue administration might have to also come in and work with those in the legislature, the judiciary, to understand the differences or the thin lines between sharing information for tax purposes and the data privacy issues. You find in some jurisdictions, specifically for Nigeria, for example, when it comes to tax, there's an exemption around sharing data. You have to share with the revenue authority, notwithstanding, as long as it doesn't have to do with business secrets or such. And all. So again, finding that balance is something tax administrations have to be intentional about and proactive in finding that borderline between protecting taxpayer information and getting necessary information required for compliance monitoring and enforcement. Yeah, thank you.
Thank you. Thank you. You've both touched on some major things. The reuse of private data for public use, privileged information, getting the requisite approvals and all that. So I'll go to Mrs. Bahira and I'll ask that are these your own challenges too? And if yes, how have you been able to overcome some of this? And if you also have some challenges that you want to throw into this bucket of conversation, please, can you lend your voice to it? Thank you.
Yes, we have similar challenges as mentioned, especially by Mr. Nguema. And so how do we engage, how do we manage those challenges? I think one of our biggest one is getting the right type of data points from our various third-party data sources. So we have actively engaged with them on a regular basis so that we can have and access the right type of data in a format that we can use. We have gone quite automated, but not necessarily our third-party data sources. So we also need to bridge that gap on how we get that information so that that information can be used without any human interaction, without any changes to that data. Data integrity is a big problem as well. But by and large, we try and verify it with multiple sources to ensure that the data that we receive has some sort of integrity. The other challenges is, as Mr. Emeka had said, is on the POPIA Act that we have, the protection of private information. So SARS is exempt from certain areas of the POPI Act to ensure that we can access data, but sometimes the counterparts, want to ensure that they're providing that information properly, that the person whose information that is being provided is well informed. And then once we get that information, we are accountable for how that information is processed. So data ethics, data accountability becomes a very big principle for us when we come to managing and processing that data. Data analytics, yes, the skill set in that is a big problem. We do have some data analysts, but we definitely need more data analysts because of the vast amount of data that we are assimilating. We've got multiple sources, both public and private, that we are getting, but you need to verify that information. And then in terms of how we ensure that we're getting, so what we use the third-party data for example, we've got the Company and Intellectual Properties Commission, where every single company, whether it's a SMME or it's a large business, has to be registered in order to be able to transact in South Africa. We can verify to see if that company has registered for taxes, for example. We can also using bank data to see if people who earn a certain threshold have been registered for tax. But at the same time, as Mr. Emeka said, we've used that information to deregister shell companies or people that should not have been on the tax system in the first place, because we do have instances where taxpayers or companies are fraudulently registered on the tax base to claim certain types of refunds when they should not even be on the tax register. So we use it both to enhance our tax register, but also for deregistration as well.
Thank you. So if I can do a recap of all that has been said today on these challenges and data registration, it's that first you need good legislation to have every third-party information from all areas feed into the Revenue Authority to be able to create a database that will be based on information that is accurate. Then you also need to, you'll also be able to use that to have people that are under declare or under assess come to the year. So it's a good one. Thank you so much. So we'll be going to the next question now. And the next question is based on the TADAT Performance Outcome Area 1, which goes to integrity of the registered taxpayer base. We know that he that wants to build the foundation is to have an accurate database based on integrity. So the integrity of the taxpayer register base requires a tax administration complete and accurate taxpayer database for effective tax administration. In your view, how can the tax administration use a third-party data source to achieve the objective under POA 1? So I don't know whether Mrs. Bahiri, can you answer this for me? Are you a student of TADAT?
Yes, I am.
Oh, great. So please
Yes.
do me the honors. Thank you.
So as I mentioned before, we use multiple sources of third-party data to verify our taxpayer register. And we use it a lot for verification to ensure that the data in the taxpayer register is accurate. And because we get the data sources, and it's an automated process as well, and it helps us identify taxpayers that should be registered and also identifies the type of registration they should have, the holistic view of the taxpayer. But also, as I mentioned before, in terms of looking at taxpayers or companies from for that matter, that need to be deregistered because they're either shell companies, they're not. We look at the economic activities of that company and whether they should be deregistered. And it has helped us, in fact, improve our deregistration of taxpayers to clean up the register to ensure the accuracy of the register. We use multiple sources to verify the location of the taxpayer, to verify the contact details of the taxpayer, just to show that the taxpayer is a valid person, national person that is still transacting in the country. So there's multiple, we use not just one or two data, so we use multiple data sources to verify the details of the taxpayer, and that improves the integrity of the tax. So it's not just to increase our tax base, but also to verify the tax register as well.
Yes, thank you so much. Yes, the key word here is tax administration as against revenue generation. And to have good tax administration, it's important to have an accurate taxpayer base. Mr. Lugeme, any thoughts from you? Any thoughts on the integrity of the taxpayer register base?
Yes, I think the integrity of the taxpayer register is very critical, because if the integrity is not good, then it results into inability to trace most of these taxpayers at the time. Either when you have an assessment that you made, you can't trace the taxpayer, or you can't enforce on any activity. So it's very important that at the time of registration, we verify through trusted sources to confirm that the person we are registering is actually the person who is a honest person and is actually a person of integrity. Because if a person you are registering doesn't have any premises, he's going to actually come back and claim a refund and disappear in thin air. So there are entities, third parties, like the register of companies. So we would ask the person to give us the BI, the company ID at the register of companies, and we can actually download the information directly from the register of companies. And our systems will directly be interfaced with the register of companies, so that if there are any changes at one side, the changes are automatically updated on the other. There are entities that incorporate companies. After incorporating and registering for taxes, they go and sell off the company to other directors. And if that information is not synchronized with the revenue agency information, it means you are going to assess taxes on wrong parties. And when you go to enforce, you will find that the persons you assessed are not the persons who are liable, because the company was sold so many years back. So it's very important that third parties are used so that we update information in a timely manner. And that makes our assessments and enforcement activities liable. It would also be possible if we have addresses verified, so that when we post or when we mail physical documents, we are guaranteed that the person we are sending these physical documents is actually the person on the other side. Some people may just put the address for the sake of it, but if the address doesn't exist, of course, your communication or interaction with this taxpayer will be very difficult.
Please type.
In URA, we are using, for individuals, we're using documents like the national ID, and we are tapping directly into the national citizens data to be in a position to verify the individual who has come in. For foreigners, we'll use the immigration information, we'll use the passport or other documents. But it's very important that this information is verified, because we need to be sure that the person we are going to deal with is actually the person who will be liable for the taxes coming forward. And also, just imagine if you're just accepting anything and we're not verifying whether the email is valid. It means that when we even send information to support the taxpayer for POA 3, that email, if the email is fake, you will never get that information. So it's very important that the integrity of the taxpayer information is good, reliable, and is complete. So we should make sure that all the information, all the fields that are critical are actually filled and populated within the taxpayer database. Thank you.
Thank you so much, Mr. Lugeme. You've covered all the pieces. You've covered it all. And before we go on with this conversation, this very interesting conversation, I would like to introduce the Deputy Commissioner General Strategic Services, Mr. Hank Williams. He would be standing in for Mr. Vincent. But Mr. Charles, please, that's not an excuse for you to leave this conversation. You are very much part of this conversation. So welcome, good afternoon, good morning, good evening, Mr. Hank Williams. It's a pleasure to have you. Please, can you kindly introduce yourself and a bit about yourself? Thank you very much and welcome to the Tadat Coffee Chat. Thank you.
Good morning, good afternoon, colleagues. Thank you very much, moderator. This is a very interesting discussion. Very happy that the tax administration in Jamaica could join in, because we have used third-party information to a great extent to advance our compliance strategy. So I'm happy to be here and share the stage with Uganda, Nigerian experience of our and SARS. And my job is to give overall oversight for the tax compliance matters. And in terms of our third-party information, we have been able to use it very broadly to assist with our compliance program. Also with registration, it has also been a critical part of our compliance actions as well as our audit program, because the data is received as part of the returns. Help us in order to, in terms of sales, to be able to have a standing relationship with over 300 taxpayers for which we identify as third-party sources, which we're able to capture detailed information surrounding sale transactions, for example, the medical industry, the retail industries are very large on manufacturing in our country. We're able to gather that information. And we have a set time in the year, March 1st, for which we ask them to supply the detailed information that we can put into our system that we have, because the integrity of the database which you're speaking to is something that we have spent a lot of time when we implemented the new tax administration, or the new revenue tax administration information system, to ensure that that system had the capacity on which the third-party entities could upload the information in a standardized format that we had determined, and that information is uploaded every year. And that allows us to put that information as part of our data warehouse, which is combined with our returns, to help us to be able to develop our compliance program across all 4 tenets: registration, filing, payment, as well as correct reporting. So we have been able to utilize in that way. We have also been able to have a review on a quarterly basis where we assess the risks that we have identified centrally, as well as those who have been identified in the field by way of the work being done by our respective officers. So we have a very detailed program in place. Let me just take this time to apologize for not having my camera on, because I'm in transit and I'm not. So I apologize at this time. In terms of the challenges that we'd have had, we'd have seen in terms of data quality is an issue. Sometimes data is not complete that we have received. Timeless receiving that information. Unlike my other counterparts, data privacy issues something that we struggle with, because information from the banks, particularly, we are not able to incorporate that in our compliance program, which hampers us. But I can say, just like I heard my counterpart from Uganda spoke to, is that we're able to use data, for example, from our utility companies to identify taxpayers who need to be brought into the net. Primarily, when we just started the program, we found over 10,000 taxpayers, which is a large percent of our database that was not registered, and we're able to bring them into the net. So it has been a very successful part of our compliance strategy going forward. I'll pause here and allow my other counterparts to speak at this time. Thank you.
Thank you so much, Mr. Williams. Yes, I was going to ask about that. We wanted to see your face. I'm sure the viewers are interested in knowing who Mr. Williams is in person, but thank you for that explanation. And I think going into the next question, I will definitely serve it at your table, because you are into compliance risk and all that. So my question to you, Mr. Williams, is to what extent has the data from the third party been utilized by the tax administration, your tax administration, in managing compliance risk and enhancing compliance? Thank you so much.
Yes, thank you. Thank you very much for that question. I will say it is a very important part of our compliance strategy. As I indicated, it is used when we are developing our compliance programs. So for example, the data that we receive for the year of assessment, we pull that into our data warehouse, and we combine that with the third-party information that we receive from the over 300 taxpayers sources that I spoke to earlier. That data is used to form our risking strategies, in which we develop a particular scores on which we determine what is the level of intervention required. So those taxpayers that we need to register, those that we need compliance action for, those that we need to have an audit program around, those for which also we need a taxpayer education program, because not all cases would require us to go and do an audit to use resources. So it's a critical part of our program, our strategy. And we have the data, for example, from our customs, which we combine with that. And it has been a very critical part. A part of our quarterly reviews. Again, the information that comes out from our auditors, from our compliance officers, that is used as part of our strategy to strengthen the risking parameters. So it's a cornerstone of our compliance strategy. Thank you. Hope I've addressed the question in full. Thank you. Over to you, Madam Moderator.
Thank you so much for your thoughts. And I have a question here. I'm thinking of someone says that I'm trying to get that information. Okay, maybe for now, let me go into the next question, and I'll come up with the question from the chat box very soon, so that we can have one of the panelists attend to that. So, Mr. Emeka, my next question goes to you. Using third-party data sources is key in managing compliance risk in a tax administration, and through that, we promote tax compliance. However, when you consider the data policy, the data privacy policy in obtaining such data, and the fact that it's been challenging to tax administration, how did your tax administration, or maybe in this instance also, since you have two caps on, the attack, navigate this challenge while observing data privacy rights? So how you navigated all that data policy and privacy rules, and you were able to access the information required? Thank you, Mr. Emeka.
All right. Yeah, thank you, Fola. I think one thing I hadn't also mentioned when we were talking about the challenges and what tax administrations can do or doing, and this is becoming more clear as we work on digital economy and the kind of information administrations are requesting from the non-residents. Where this comes out is the fact that you have to know what you're going to use the data you're asking for. Asking for all information sometimes doesn't work. So again, this is where data strategy comes in. What type of data do you need? What do you need the data for? And what are you going to do with the data? Once you understand this, it's also easier to communicate this to the stakeholders in establishing why you need the data and why they need to give you that data. You find that most times there's the cast the net and capture anything you can kind of approach. But in certain instances, you have to figure out what was the use of the data, what is the value. And this also helps in terms of optimizing your resources to analyze the data and all. So giving that background directly to your question, again, from experience with FIRS being in Nigeria, first of all, is the legislation. There's provision within the Tax Administration Act, which is the Federal Revenue Service Act, empowering the Revenue Authority to seek any information from anyone, any third party, be it public or private, for tax purposes. So this has enabled the Revenue Authority to implement that. But one issue you find is it's what level to allow for that request. But in terms of TADAT, to make it systemic or systematic now, it means you have to have a systematic process. You find out when the law is that way, the question now becomes, and there's been cases where this went to court on, are you allowed to plug into the point of sale, for example, to get that information on a regular basis for the private sector, or is it based on request and need? So again, the legislation has to be clear on the process, and coming into the fact that we're going electronic, the use of electronic devices or APIs or certain things to plug in and get that information. The law probably has to provide for that also and make it clear. In terms of privacy, two levels again, ensuring that there are systems, first of all, in place within the revenue administration. Found where revenue administrations use the ISO's international standard organization. I can't remember the one is applicable now, but as it applies to risk and data privacy and information, they first of all go through that assessment to make sure they qualify. With the example from SARS, example from Nigeria, where the Privacy Act makes an exemption for tax purposes and things like money laundering purposes and investigations. So again, being intentional and having this conversation with the legislature, the stakeholders, the civil society, the judiciary, understanding why this is needed and putting those into law. Because once the law is there, it's now implementation that we move to. But where the law is not clear and the law is not there, you're going to have it contested in courts. You're going to have people raise issues on whether you should. So again, have legislation, let the legislation be clear on what, when, and how to an extent that will be done, and then make sure that the operational environment is conducive to, ensure that privacy. And one thing I wanted to add is on the first question about registration and looking at that, because now we're talking about compliance and challenges. We always look at registration and the registration when it comes to the TADAT and use of third-party data. But third-party data is so important at the registration level, because if there's no integrity or you don't know the amount of taxpayers you have, we can't talk about compliance. You can't talk about knowing who is supposed to file. You can't talk about who is supposed to pay. So it's very critical, actually, that you get the registration part right. And this is where third-party information is quite helpful. And then again, we talk about the two levels of registration. Just getting the TPIN or the TIN, the taxpayer identification number, and actually registering for tax type. You find in places like Nigeria, third party has been used, like the Corporate Affairs Commission, to ensure that every registered business gets issued a TIN. And a further request is made that before you open a bank account, you have to have a TIN. And these are things put in place to now enable the Revenue Authority to have access to a database to know who is registered for business, for example. If you request information from a bank, there's now a tax identification number tied to it, and it makes it easier to identify the person. So from that registration perspective, it flows back into the tax compliance and knowing who is supposed to file and who is supposed to pay.
Okay, we seem not to hear you again. Okay.
Yes, I have concluded.
Okay, thank you so much, Mr. Emeka. So things that I can take home from what you said is the fact that the tax or the revenue authority should try to avoid garbage in, garbage out. The integrity of the registered taxpayer base from the point of enumeration and getting that data is key and will determine how much revenue is generated, the ability of the revenue authority to be able to use the information they have gotten. So they have to be specific. The request for the third-party data has to be for a specific purpose and not just requesting for all forms of information. I would break now because I have a question from the chat room, and I'm going to be reading that, and I would appreciate if one of our panelists can please, using their perspective and experience, help us to answer this. It says, I'm interested in the use of bank data for compliance. Have you been able to integrate with banks? And if so, how did you go about it? And if not, how do you get their data? Thank you. So it's basically a viewer asking a question as to access to bank data, third-party data from the banks. If you've had any challenge in getting this in your revenue authority, or you've been able to access this, how did you do it? And if not, what do you use, or how do you go around that challenge? Thank you. Who will do me the honors? Will
Okay.
it be South Africa
I'll go first.
or Uganda? Thank you.
First of all, we need
Yes.
to understand the concept of compliance from the tenant perspective. And compliance is basically looking at taxpayers who are not fulfilling their obligations. Taxpayers who are not registered, taxpayers who are not filing, taxpayers who are not paying in time, and taxpayers who are not accurately declaring. So if you look at the 6th POA accurate declaration, a taxpayer will declare in his return that he acquired a loan from Bank A and is paying interest of so much and is paying a monthly installment of this much. And in the annual expenses, this is the interest he has paid on that loan. So when you go to the bank data will indicate the people who acquired the loan in the period. And the period the bank is indicating should be matching the period the person has claimed to have acquired the loan. And the terms of the loan can be identified. Because it is possible that a taxpayer got a loan of 1% interest rate, but is claiming an interest of 15% because he wants to inflate his expenses in relation to the loan interest. So the bank information will help you validate whether the interest the person is claiming is actually accurate. So if you compare what the taxpayer is claiming and what the bank is indicating, then that can be allowed. We will also find people in the bank data, people who own bank accounts, who have loans in the banks, but they are not anywhere on your taxpayer register. So we can use the bank information to identify.
So, Mr. Charles, but now can you narrow down to accessing that data? How easy is it for revenue authorities to access that data from the bank?
I was coming to that.
Okay.
The challenge we've had in our place is that if you ask information for all bank account holders, it is going to be very difficult to access that information. But they will always give you information if you ask for a specific taxpayer.
Okay.
So the challenge is, if you do not know who owns an account in that bank, it will be very difficult for you to get that information. And that's the challenge that we're still fighting and struggling with.
Okay, so what you're saying is it's similar to what Mr. Emeka said. He said that you have to be specific about your request and not just ask an open blanket request. So that means that the Revenue Administration must have done a lot of job in identifying the particular individual or taxpayer and linking that taxpayer to a bank before making that demand for information.
Yes, but
Okay,
working with the central bank would be helpful. If you worked with the central bank, like the Bank of Uganda, it becomes easier for you to access that information than going through a specific bank, because the Bank of Uganda is the regulator of the commercial banks. So it will be easier for the Bank of Uganda to direct the bank to provide the information. Yeah.
Thank you so much. Any thoughts from South Africa? Perspective from South Africa?
Thank you. So we mainly use the banks to verify bank details of the taxpayer, and that we can do that through an automated process. But other transactions and all, we have to request for any specific other information that we want from the banks. And usually the banks are quite cooperative in this regard. The challenges we experience is when you want historical data, if there's an audit or an investigation in place, and to obtain that very historical data. The challenges is the backlogs and the delays that comes from the banks themselves, because of course they need to also access that historical data. So that's the main challenges we experience. But other than that, if you wanted more specific details about the transactions of a, then there's certain legislation, then there's certain processes that we need to follow to enable to request that particular information from the banks.
Okay. Okay. Thank you so much. So please, we're still open. Feel free to share your thoughts and questions on the chat, in the chat box, and we'll try to attend to that. Thank you so much. So the next question, quickly,
Sorry,
that we'll be going into, it's
Hello,
yes, please.
Okay. Oh, I wanted to put the Jamaican perspective on.
Yes, I can hear you. Okay. Okay, Mr.
Right.
Emeka, I'll have you first, and then I'll have Mr. Williams.
All right. I just wanted to share a bit of perspective on the question around the banks. So when I spoke of knowing the data you want, this would be at high level, and this might differ from jurisdiction to jurisdiction. But I'll use Nigeria again as an example, and this might have changed. In terms of getting information from the bank, there are two types of information. There's the continuous flow of information, which is not based on request. And then there's a type of information that is based on request. And what was done in Nigeria was in the Companies Income Act, and I think the the Federal Inland Revenue Service Act, a provision was made that banks are required to submit on a quarterly basis transactions of a certain value, of a certain threshold. So without the Revenue Authority prompting, the bank is required to periodically send that information every quarter. And I think it used to be about 5 million naira for individuals and 10 million for corporate entities, if I remember. So the law clarified was direct about the threshold and who to submit that information, which is the banks. This is different from the ability to get information from third-party provision. And now you have the provision for obtaining information from third party. Now, when you need information on things like credits, loan, all those things that are more specific now, either during an audit process, compliance process, or investigation, you use that power to request information from third party, but there's provision that requires the banks to send information without prompts of the Revenue Authority. The only issue around this, if I remember, was a case of could you automate it? Now, there was no provision at the time that allows for automation of that process and all, but I think in the Finance Act of 2020 or 2021, if I remember correctly, a provision, or 2022, a provision was made to allow the Revenue Authority, if need be, to use electronic means to obtain the information, because this has now been implemented in other sectors, maybe not banking, I think cable TV, airlines and all, where you can plug into the point of sale to obtain information. So I'm guessing at some point this might also happen with the banks, but on a quarterly basis, the banks are required to send in this information. Thank you.
Thank you so much. So now, Mr. Williams, let's have your own opinion or views on this very interesting topic, third-party data. Mr. Williams.
Yes, thank you very much. Yes, thank you very much, the moderator. In the third-party information, generally we have the empowerment based on the Revenue Administration Act. We're able to get data from all sources. But in terms of usage of the bank, it's a little bit of a delicate matter. We cannot use it in our mainstream compliance activities, but we collect the data periodically to assist with exchange of information, primarily under legislation. Legislation should be created primarily for sharing data with the United States. We are also looking at it in terms of the general automatic exchange of information in that regards too. However, in terms of the
Mr. Williams, you seem to be breaking. You seem to be breaking,
yes,
Mr. Williams.
Okay, hear me better now. Yes,
okay.
Yes. I say in terms of the matter of the information regarding the banks, we can use that information. For example, if we want to use for garnishments or liens, we can use it in that regards, but we cannot use it as part of the strategy to do the risking. But that's the extent that we can use it. So it has formed a very critical part of the strategy in that way, but we cannot use it at the individual level, broadly speaking. Thank you.
Thank you so much. Viewers, I want you to remember that we are speaking on third-party data, and it's basically the life of every revenue administration. So the conversation is indeed interesting, and when we promised you at the beginning of this program that we'll try to bring you all sides of this conversation. So we hope we are doing justice to that. Please, the chat rooms are still open for questions, and we will definitely try to get to your question. So the next question I have for the panelists is, from a taxpayer's perspective, how do you strike a balance between sharing client data, especially where you are hosting a rich database with financial information, with a tax administration, and ensuring that you protect client data? Mr. Williams, I think this rightly falls on your table. Please, can you give us your perspective with respect to this question? Thank you so much.
Yes, thank you. Yes, for us, we pay a significant amount of attention in terms of striking that balance, because a very delicate one. In terms of the fact that we are mindful that the information at the individual level, we cannot incorporate that in our compliance activities, but we are also mindful that we have a responsibility to ensure that persons pay their fair share. So what we do is to try to ensure that, for example, as I said before, where there are, for example, high wealth individuals, persons who are evading, we try to incorporate that information by way of garnishment and lien if necessary. But in terms of the matter of verification, we can do verification with the banks. That's the extent to which we can use it to. Or if we want to verify, but we cannot use it to do the risking. So it's a very delicate balance, and we are very mindful of that based on the limitations by way of the acts that govern the financial entities. I hope I've spoken to it broadly.
Drilling a bit down into protecting clients' data, privileged information, and trying to still build a rich and robust database of individuals that have been profiled. How do you cross that fine line? How do you ensure you don't navigate into uncharted terrain and waters, and you maintain privileged information of clients? How do we get to ensure that?
Great. Part of the Tax Administration Act provides for us to be the guardians of the taxpayer information in such a way where there are limitations on the extent to which we can also share that information. It may be for court proceedings or any other matter that the minister has seen so fit to use. So in a lot of cases, what we have to do is to get ministerial approval, which we'll have, for example, a legal team do the necessary due diligence to ensure that we do not in any way put the organization at risk. And it becomes very tricky because, for example, with matter of money laundering, we have gotten those requests from our entity or law enforcement entities, for which we have to take the time to scrutinize those in such a way where we do not allow ourselves to go within outside of our remit, and the legal department plays a critical role. And that other layer, which we have to take it to the minister, is the other checks and balance that allows us to ensure that we protect the privacy of information as the law has so prescribed. So legislative support is critical, and ensuring that provides the necessary mechanisms to protect our taxpayer is what I think is fundamental into this discussion. Thank you.
Thank you so much. So you're saying that high-level approval that might go beyond the revenue administration and go into the space of oversight functions of other ministries that oversee the functions of the revenue administration might come into play to ensure that the data and the information of the clients are protected, while you are able to use the information also to generate revenue. Mrs. Bahiri, please, can you give us your thoughts briefly on this?
So in terms of the SARS perspective, we are actually legislated by law not to share certain types of data. Of course, if there's an investigation, money laundering, for example, terrorism, then there are certain exchange rules that we can share certain types of data. There are control measures in place on how and what type of data and as Mr. Williams said, we are confined by legislation and the controls that in order to share that type of data. But if any other third party wants to access that data, they have to do do so through a court of law, any other outside that the current legislation, and if they request, and we've had cases where people have requested through a court of law to say we want to see certain persons' tax information, and they were denied. They were so no, the court has denied that access. So it does become a bit of a problem, but yeah, we have created certain areas where we can exchange that information, particularly in high-level investigations. But usually when we want to share data, we inform the taxpayer, or inform the person whose data that we need to share, and the data must be shared with an information officer as per our POPI Act. But SARS is still wholly responsible for how that data is processed by the third party that has requested it, but we don't share it without the certain legislation or without the court of law saying, yes, we can share that information.
So you have to dot your T's,
Yeah.
cross your T's and dot your I's legal-wise, so that you don't have an influx of litigation on the revenue administration. Thank you so much. Mr. Charles, I've not forgotten you. So this question from the viewers is going to be thrown to you. And we have a question: how can credit reference bureaus be leveraged on by the tax administration for third-party information collection? How can credit reference bureaus be leveraged on by the tax administration? Thank you so much.
Okay, the credit reference bureau information indicates, because we have what we call financial importance of a taxpayer, because compliance is about risk management, and we need to prioritize which cases we should address, we should tackle first. So the Credit Reference Bureau provides information about the financial importance of a given person from the bank perspective. So if a person is creditworthy, if the person is paying his loans on time, if the person is from the banking circles, they have a higher rating for that person, it's highly important that the same rating is brought on our side, and then we gain interest into what that person is doing. So people with a higher credit rating on the bank side are financially very important on the revenue agency side, because we need to make sure that they are complying with the taxes the same way they are loyal to their banking sector. So credit reference bureaus are used to provide information that will be embedded within our risk management framework and be in a position to identify which taxpayers are very important, which taxpayers are very important to banks, but are rated very low on the taxpayer side from the revenue agencies. So with that approach, we are able to detect those taxpayers that are actually creating a low impression on our side, but are highly rated by the commercial banks. And that gives us an opportunity to identify cases that we can push to the tax investigation divisions. Yeah.
So that's rich third-party information that can be gotten from that angle too. And it will be very useful for you. So Mr. Chow, you are still at the front burner. So my next question is still thrown to you. Data protection laws in most jurisdictions, it's a long one and I'll definitely repeat it. Data protection laws in most jurisdictions across the globe pose a great challenge in using third-party data for tax administration. How can one navigate this? Specifically, tax administrations in developing countries who face mounting challenges in accessing data from third-party sources, which includes, but is not limited to, telecoms, banks, insurance companies, and stock. Now, specifically paying attention to confidentiality of client data, which has been cited as the main reason for the stalemate. How do you navigate all this? How do you navigate this this situation, and how do you ensure that in the developing countries you are able to access data from third-party sources without breaching the confidentiality rule of the client involved?
I think what is important is we need to identify strategic partners as we go into venturing in these areas like telecoms and banks. For example, telecoms, the regulators of telecom sector are usually government departments. Like in Uganda, we have Uganda Communication Commission. So it's highly very important that the revenue agency partners with the regulator to execute their missions. In many cases, if we operate as revenue authority and ignore the telecommunication regulator, it may be very difficult for us to maneuver and be in a position to access the information desired. I'm sure the regulators' interests are the same interests as revenue agencies because the regulator and the revenue agencies are all government departments and are all aiming at maximizing revenue, funding the government projects. And regulators are benefiting from the money we collect from these telecoms. So it's very important that we work closely with the revenue, with the regulators to be in a position to circumvent some of these obstacles. The same thing with banks. If we worked with the Central Reserve Bank or the bank regulator, it would be easily possible that the commercial banks would cave in and allow the regulator to share that same information with us. The same thing, we can also work closely with the parliament so that they enact laws that do not disable revenue agencies in execution of their work. So strategic partnerships is a key thing that we need to deploy in the process of addressing some of these concerns. We also need to work with the courts of law, judiciary, so that we keep them aware of the challenges that we're facing with the certain laws and whatever, so that when these people run to the courts of law, at least the judge has an understanding of where the issues are. I don't think there's any law that says so and so will never pay tax and hide behind the confidentiality or whatever. So we need to keep our stakeholders aware of the challenges that we're facing and then work together towards identifying solutions to those challenges. Thank you. That's it.
Thank you. So it goes back to maximizing your ecosystem and the opportunities that lies therein. Mr. Emeka, give us your thoughts from your time in FIRS on this, navigating the privileged information and third-party data. Will I call it a quagmire or will I call it a maze? How did you do that, and what can you give us as a view?
So on the confidentiality issue, I think again, Mr. Charles has kind of spoken a lot about it on the partnerships, because I found that then it was easier to work with the regulatory body authority in charge of that sector. But in some instances, you might still face some challenges. So again, we go back to legislation clarity. But to add to what Mr. Charles has said, or the ecosystem or working with other stakeholders, you have to kind of project a shared interest. What is in it for the regulatory body you're also partnering with? And how does it help the taxpayers or the party providing the information in terms of compliance? So once we've addressed the issue of legislation, clarity on what is confidential and what is not, what information is going to be used, the purpose of the information, for example, and all. There's the part of internally providing some sort of assurance that the confidentiality would actually be maintained. And I think as part of, again, that if we look at POE2, when we get to maybe the human resource and operational risk, you find the part that requires some of those. Those have to be included in the assessment. Our officers want to oath of secrecy, for example, or confidentiality. Can you hear me? Our officers want to oath of confidentiality and
yes,
such.
Yes, I can.
Is part of your risk framework, does it include protection of data and that confidentiality? What are the physical, will I say, limits or boundaries you put in place to limit the possibility of that data getting out from physical data in terms of files or the digital ones? Because that gives confidence to the person you're also asking for that information, that when you get the information, it's going to be secure. So beyond the law, beyond the collaborations, you need to create that confidence that you're able to handle such information when given. Because then when you're also going back to the judiciary, to the legislature to make this argument or have this conversation around the need to understand the needs and to obtain that information, you're also giving assurance that the information will be protected. I've seen a certain instance where data was required from a certain sector. The sector through its body pushed back that it would impede privacy issues and all. In fact, they made it a case that is a national security issue for them to give you that information. But what happened was the Revenue Authority now had to work with the relevant regulatory authorities to say, okay, even if it's a national security issue as it's been put, how can we still have some level of access? And it was agreed that a different regulatory body who already has oversight will collate that information, go through it, and then share with the Revenue Authority based on an agreed format to make sure that what is being shared doesn't include whatever would endanger national security or be confidential. That's one arrangement I've seen. So there are such collaborations and all. But I guess I had to add also, I think Mr. Hank touched on AUI and the FATCA. Those are systems that have requirements already on how information should be shared for tax purposes and what should be done to ensure confidentiality. Those are tested. So those are on the multilateral international level of sharing information, basically. Thank you.
Thank you so much. Thank you for your thoughts on that. Mrs. Bahira, Behari, sorry for that. My next question goes to you, and we are slowly getting to the end of this event. So my question is, developing countries typically experience low tax compliance rates arising out of a weak compliance mechanism put in place. How can the use of third-party data help to improve tax compliance? Thank you.
Okay. Thank you. So we've leveraged quite a bit in third-party data to improve our tax compliance by verifying certain data and then engaging with the taxpayer on that information and teaching them the requirements for compliance. A lot of the times, if you look at our strategic plan, we even state that clarity and certainty of the taxpayer was lacking, so that sometimes the taxpayer was ignorant of what their tax obligation is and what to comply and how to comply. Because sometimes, the laws are a bit difficult to understand. So we've had robust sort of engagements using various types of platforms that's really helped improve that sort of compliance levels of the taxpayer. And we did that by saying, okay, looking at certain third-party data, we can home in on which sectors are not complying and which sectors need to be engaged with to enhance that, so that we engage with the taxpayer and say, look, we've got this type of information, and based on this information, you need to comply. And these are the reasons before we embark on punitive measures. So it's first, providing that clarity, that education, servicing, and then we embark on enforcement measures based on the information that we have. I must say that our voluntary compliance based on the taxpayer register that we have has improved tremendously in the last couple of years because of using third-party data. We've even used third-party data to fill in the tax returns for a majority of our taxpayers, especially our personal income taxpayers, and then auto-assess it for them as well. And if they are comfortable with the auto-assessment, they can just leave it. Or if they're not comfortable with the auto-assessment, they can then say, I want to lodge an objection or dispute, or I want to add certain other information. So, looking at your previous question as well, we've leveraged that third-party data to say, okay, we've got the medical aid information, which taxpayers actually should or should not be on the taxpayer register database. Based on the insurances, your RAs, etc., which taxpayers should or should not be on the taxpayer register. So we get that information automated from the insurance companies, particularly, and from other entities. Obviously, the data points are very important so that we don't breach any confidentiality rules. Both the company that is providing us the data as well as the data that we want to access, we are also exempt from the POPI Act to access certain types of information so that to improve tax compliance. But we've leveraged quite a bit in terms of third-party data to improve our taxpayer compliance. As I said, first to reach out to the taxpayer, to educate them, to provide the clarity, and then if necessary to engage in enforcement activities.
So enforcement is the last lap.
Yes.
Mr. Williams, the compliance person here, I'm interested in your thoughts on this matter. Please, can you lend your voice?
Yes, thank you. I could not let the meeting end without finally get a chance to show my camera, show my face. Yes, just like my counterpart from
Okay.
South Africa, we
Yeah, thank you
have
so much.
found the third-party information very useful. As I said already, it's a cornerstone of our compliance activities. We have used it very extensively, all that information, as your previous question, from what we get from, for example, the credit bureaus. Again, the challenge that we face is that the data sometimes is not submitted at a timely basis, although we have the cutoff period that we have, because it's not enshrined in legislation. There's no legislative support there, one, and it's more or less voluntary. So the information comes in, but it comes in very late to be incorporated in our compliance action. So that's a challenge that we face. The data quality issue was something that we had initially as a problem. What we have done is that we have had training sessions with our third-party entities based on the sector that they're in to ensure that the data that is submitted, that they understand the format that we want it, also know the importance, as my counterpart said, why the information is needed, and also we provide ongoing support. We have an officer who deals with third-party information. So if there's any challenges, for example, to uploading, is there any challenge in terms of the whole matter of the system? Again, in addition to the system, there may be challenge in terms of clarity required. There may be change of personnel in entities that we have a relationship with. We have that person on hand. So it's very important to get this going, that we have a strong partnership again, and the training if necessary, and the support to ensure that the data that comes in is of a high quality. But we are going to the extent that because of the delays, we're looking at how is it that we can provide legislative support to get that information in a more timely manner, because again, we see the importance of having it in our system. Thank you. I hope that provides the
Yes,
necessary.
it does. It does. Because you
Thank
brought out something very salient, stakeholders engagement and letting your partners know exactly what you require from them, in what format, and within a specific or required time. Thank you so much. So the next and final question will be open to all the panelists, and I'll be calling you one after the other to share your thoughts briefly on this question. How do tax administrations leverage technological advances to improve revenue collection, especially on the accuracy of declaration made by the taxpayers in their tax returns? I'll start with Mr. Charles, bringing the Uganda experience for us. Thank you.
Thank you. Technology is a key component in our enhancement of compliance management. The data generated across the network is utilized, if utilized effectively, gives us insights on areas where people are not complying. So with the data that is generated from third parties and the technology, we are able to detect people who are not accurately declaring. For example, someone claims his transactions in a whole month has been nil, but another person somewhere declares that he purchased goods of a certain amount from that same taxpayer. So technology allows us to match those two taxpayers and be in a position to deal with the situation. In the past, we used to deal with such cases 6 years after the transaction happened, and it would be very difficult to recover such revenue. But because we are dealing with it in a timely manner, we are using technology to be in a position to discover those opportunities and be in a position to enhance our revenue. If there is a transaction of a given magnitude, we can set the technology to pick any transaction above a certain amount. And then all those taxpayers that are associated to that transaction can actually be segmented.
I've lost you. Okay.
Yeah, do you hear me now?
Yes, thank you.
Yeah, so
I hear you.
we've built a data warehouse where all this information from third parties and the information in the return submitted can be matched and compared. And the people with differences, for example, we do have that every system. We are able to project how much VAT you will return in a given month. So when you make your return, we compare, and the projections are based on third-party information from the every system. So if you bring your return, and your return is substantially different from what we had, then we pick you and put you into a risk group that our compliance officers can immediately examine and be in a position to give you an additional assessment or call you for an interview. So technology has been helpful in reducing the time within which we are able to discover the issues of non-compliance. The longer it takes for you to discover a case, the harder it is for you to recover the revenue, even if you assess it. So the timely interventions are so helpful and have made it easier for us to enforce compliance, because very few taxpayers are still thinking about hiding certain transactions because they know we'll discover those transactions anyway. Yeah, that's the opportunity that we have utilized with technology and third-party data.
Thank you so much. Mrs. Bahari, the South African experience on this question, can you please let us have it?
So we've embarked on using machine learning and artificial intelligence type technologies, especially in processing very large amounts of data. It's from third-party data sets. If you can imagine, it's a huge amount of data, and through complex algorithms and etc., we can then quickly pick up where are the risks, where are the risk areas to enhance our compliance activities as well. So yeah, we've mainly used artificial intelligence and machine learning. So we're using those type of technologies for the huge data sets, and we've are trying to get more of that type of skill. So that's the main way that we've been using technology enhancements. As I said, it also helps us to automate our e-filing. Like I said, we've through AI interventions, we've managed to then fill in the returns with the necessary verified data, so that the taxpayer doesn't even need to file a return anymore. The day the return is filed, it's auto-assessed, and a taxpayer is informed of the return being filed of the information, and then the taxpayer can then it's got a certain amount of period to say yes or no, I'm comfortable or I'm not comfortable with the data. By using AI type technologies, we've been able to improve on that tremendously.
Thank you so much. Mr. Emeka, your thoughts on this final question?
All right. I think my colleagues have generally described what you find across board in most tax administrations in terms of use of technology to improve the accuracy of declaration. And I guess this speaks very much to POS 6 and cross-checking of information. But an example I can give is it's a bit of third party, but not also third parties in Nigeria, where you have the systems plugged in. Again, this was in the spirit to achieve auto collect, which was collecting some sort of split payment system where you're able to collect VAT at the point of transaction. But that has transformed into information collection system also at this point. So you had revenue authority plugged into the point of sale of certain sectors, service provider or sale of goods, and they get information whether in real time or post-transaction on the transactions carried out by that entity. But what this has provided is a rich database to now cross-check and cross-match against declarations filed by either that entity or other entities that the information might have been given through this system. The level of automation is still something in process, but at least it's provided a data pool from which to do this analysis and cross-checking. So we'll find where in the future, probably similar to what you have in terms of a pre-filled declaration under the income tax in South Africa, where this could be a thing across, where automatically the system compares this data and is able to cross-match data from various sources through this plugging into POS, which is similar to some sort of EFD or what you would call a CTC, continuous transaction communication, basically. You can find where in the future the system is able to automatically cross-check this information and validate it against the declaration. Now that you also have online filing, where there's no longer manual filing across board within the revenue administration. So it's one to look out for, an interesting space to watch out as we are looking at digital transformation. So technology can be used and has been in collecting information and then doing this cross-checking. Thank you.
Thank you so much. Mr. Hanks, any final words or thoughts on this question as we begin to bring this conversation to a wrap?
Yeah, I think my colleagues have spoken extensively to it. So I just want to sum it up by saying that for me, I believe that we can no longer, as tax administration, separate the work that we do from seeing the need for to digitalize. It's so critical that we digitize our processes. And in doing that, it allows for efficiency gains, and we can maximize on leveraging our resources to be able that we utilize them in the most strategic way to ensure that we maximize revenue collection and also, again, the credibility of a revenue administration system. So again, I believe that in cases of what we need to do is that legislative, so if digitalization is critical, but we have legislative support has to be considered, that legislation to ensure that we information that we get their own electronic form in terms of the matter of how is it that we treat with those information, the investments that we make to ensure that our systems are reliable, that we can get a 360 view of the taxpayer and use the supporting third-party information in order to maximize on, for example, the pre-filling. How do we cut off in terms of when we do a taxpayer education as opposed when we do an audit or compliance actions? I think it's critical. So for me, I think one of the important thing of the digitalization is that it provides for efficiency gains and also allows us to be able to do our work in a manner which gives us the level of credibility and trust that is required to move forward in a modern system. Thank you very much. Thank you so much.
Thank you so much. Thank you to my panelists. You've done justice to all the questions. What I'll just be doing as we come to a close very soon is to ask if there are any final thoughts from any of our panelists with respect to the conversation, any final thoughts whatsoever that you feel we should take home with us today. Any final thoughts, Hank, Mr. Emeka, Mr. Charles, and the lady in the house?
I think what I would say, Fola, is beyond all, I think revenue administrations need to start thinking of data strategy. This cannot be on ad hoc basis. It needs to be proactive. It needs to be well thought out. There has to be a strategy around it, because then you're able to figure out the legal aspect, the operational aspect, the risk, and the stakeholders and partners you need in achieving this. So there needs to be clear data strategy in how it's obtained, how it's used, from who, and what's to be done with it at the end of the day. I think that would be the summary in this context. Thank you.
Thank you so much.
Yeah, sorry.
Yeah, mine is that revenue agencies need to be fact-driven. It's no longer possible for us to operate based on chances, and the facts can only be derived from data. It's very important that we utilize the resources that are available. We build the skills. We identify reliable data sources and utilize technology in order to identify the taxpayers that we can target in our compliance programs if we are to maximize revenue. That way, our efficiency will grow and we'll be in a position to promote transparency, because we are no longer using guesswork to bring taxpayers to book. We are using facts, and these facts are derived from third parties and the environment through which these taxpayers operate. So that way, our reputation will go up, transparency, and it will be also possible for government to predict how we are progressing in our compliance programs. Thank you.
Thank you so much. Thank you. So the lady in the house.
Yes, I just wanted to say that we've managed to successfully leverage third-party data, and we now have a published data governance framework, a data governance strategy, if you want to call it that, and policy to make sure that we are aligned to the legislation, to the POPI Act, to the Access to Information Act, so that we can use that data properly, we can access the right type of data, and on a continuous basis we engage with our relevant stakeholders just to improve the data points and the data sources, how we access that data. And I think that's the most important thing, is engaging with our relevant stakeholders, whether it's in the private sector or the public sector, to ensure that we get the right type of data within the legislation, within the laws, etc. Using technologies like machine learning and artificial intelligences to improve our ability to use that data. We've got a large amount of data and how to utilize it more effectively. And I think it was a very long journey. It's still a very long journey, but we're getting there. Thank you.
Thank you so much. Mr. Williams.
Yes, thank you very much. Yes, just want to say that to tax administrations generally, that we realize that third-party information is very critical to strengthen our compliance programs. And it is also important that we put the necessary systems in place to ensure that we can get the necessary efficiency gains from the system. The system must be reliable, one in which it allows us to be able to ensure that we are able to accurately assess as well as determine the risk. So I want to say that it's very important that we put the necessary mechanisms in place to maximize on the use of third-party information or compliance programs. Thank you very much. It was indeed a pleasure to be here.
Thank you. Thank you. Thank you so very much for all that has been said. Thank you, my panelists, subject experts, for coming on the Sadat Coffee Chat and giving us your perspective and perspectives from all sides of the globe to take home and impact our job as revenue administrators. To our viewers, I want to appreciate you and to tell you that this was made possible by the Sadat Secretariat through the Sadat Coffee Chat. So you can register with the Sadat Secretariat, you can register so that you would have first-hand information on all our conversations via the Sadat Coffee Chat. Again, it's been made possible by a host of partners, the UKA, the World Bank Group, the Norwegian Ministry of Foreign Affairs, the European Union, the IMF, and a host of other partners that have made tax business and good practice business that needs to be attended to. I want to appreciate the team, Mr. Zake, and everyone. I remain your moderator, Folashade Koka from the Lagos State Internal Revenue Service, Nigeria. And I say that until the next episode of Sadat Coffee Chat, which comes up every month, once a month, where we enable good practice while sipping coffee. Thank you for your time. Enjoy the rest of your week. Stay safe and well. And the very best to my Nigerian viewers. And I wish you the very best for the elections that are coming up this Saturday, next episode. Do stay safe and well. Thank you very much. God bless you. Bye for now.